Hello, Sevan. Welcome to the Builders Podcast. It's a pleasure to have you here today. How are you, first of all?
I'm very good, thank you, and thanks for the invitation.
It's a pleasure. It's a pleasure. Would you like to give us a little bit of your introduction, your background before we start?
Yes, of course, of course. So I'm Sevan. I'm a co-founder and CEO of Fleet. I did a classic. I have a classic background, I would say. I did a business school in France, and then I joined a group called after. So I did some internship in finance and consulting, but I wanted something very more on the ground, I would say. It was back in the 2012, I think, almost 14 years ago. And at this time, we didn't have all this startup ecosystem in Europe. It was not such hype around entrepreneurship and startups in Europe. So if you wanted to join something more operational, more building, more startup, you had one group back in the days called Rocket Internet, German group, that was very successful in building e-commerce websites in Europe in the 20th. They've been building e-commerce that they sold to eBay in the late 90s, and then they build Zalando, HelloFresh, some big e-commerce websites. In the early 2010, changed their strategy, and they started to go in emerging countries and try to replicate business models that was very big in Europe and in the United States in emerging countries. So Amazon, eBay, Uber Eats, etc. And so I was hired to develop kind of Amazon, eBay e-commerce websites like in North Africa, in Morocco, Algeria, Tunisia. And so I went very young there as a business developer, to build a team, to grow the business from zero, 0 to 1, with the platform from Rocket Internet and the funding from Rocket Internet. So I was just an employee. And this is a very big experience for me, very structuring, because I learned how to build a business, how to grow, to scale a business. I also met my future co-founder at Fleet, Alex Berish, and I enjoyed a lot. And I grew the team from 1 to 100 people in only 3 years
Wow.
in North Africa. Yeah. That was big. And now, so the name of the business is called Jumia. It's listed on
Yeah.
the New York Stock Exchange now, and it's I think the leading e-commerce website in Africa. And so, it was a big experience, and that was the experience that brought me into entrepreneurship, and I got a lot of learning from this experience.
Amazing. I think that was like, it must have been a crazy experience, to do that in that period in time in North Africa, where probably the startup ecosystem was basically not existent at the time. So doing that, it must have been a real challenge.
Yeah, it was crazy. I mean, people was not so much connected. E-commerce was very at its early days in Africa. People didn't have any, online payments, so we were doing cash on delivery, meaning that the delivery guy was delivering the product and getting cash like manually from the client. So a lot of security issues, a lot of complex
Yeah.
process.
Yeah.
Even the address in Africa, it's crazy because people don't have precise address. So they tell you like next to the pharmacy around the corner. I live there,
Amazing.
So it's really special.
The
It's really
delivery guy is
special.
going crazy over this.
Yeah, I mean they figure out, they call, they know, but yeah, it's not very process driven, and even for me, the experience was crazy because I was in a local contract, Moroccan contract, but that was not valid or whatever. So I was paid in cash every month, and I have to bring the cash back to Europe.
My God.
So yeah, so sometimes it was a little bit shady. So yeah, it was
A lot of red
yeah.
flags for money laundering, to be honest.
Yeah, but it was, like a risk culture. I learned how to take risk, and like things were fine. Even if you take
Yeah.
risk, like adventure is good. And this is the story of entrepreneurship. So.
Yeah, I think that is one of the rocket internet overall, but also the startup ecosystem in that period was getting a lot of that get things done kind of attitude. So you don't stop for kind of rules or compliances, but you try to solve the problem really, and also having the opportunity to be working with a lot of fintech companies, for example, also in the MENA region. I know that cash is still king in greatest part of those countries. And there are a lot of problems with payments because most of them are still driven by cash itself. It's one of the biggest problems, I think, in the region itself, because still digital payments are very, very low compared to what are done in cash overall. So it must have been a challenge over there.
Yeah, totally, totally. I think people now in Africa are very connected. They all have mobile phone.
Yeah,
They all go online a lot.
a lot of
But
digital
cash,
wallets too. Yeah.
yeah, they have digital wallets. But cash and bank relationship is complicated,
Mm,
very complicated. But back in the days, in 2012, so I opened also Tunisia and Algeria. It was North Africa
mm,
overall. And I remember that in Tunisia, crazy, but in Tunisia, for people, the internet was Facebook. Facebook was, I mean, people were like, mixing internet and Facebook. It was crazy, you know. But because you had all the Arab Revolution coming in Tunisia,
yeah.
from Facebook in 2010 or 2011, something like that. So in 2013, 2014, in Tunisia, people were doing everything through Facebook, also buying through Facebook. Facebook was the Google, the
Of the
web
time.
browser of people, So it was very interesting to see the behavior of people in those countries.
Yeah, and it's very interesting to see how it affects, people life, but also startup development, So you don't need like two, three, four, five platforms to make acquisition. You just go to Facebook and you spend a lot of money in ads in order to acquire new users. So that's kind of interesting. I was taking a look before the call to your profile, and I noticed the kind of investments that you made over time as a business angel, I believe. And there are a lot of very interesting companies that you've been investing over time. A couple of them have also been on the show, like Fromans, for example, but also Anthony from Rerail. So I wanted to ask you about that kind of part of your background. So how much have you been doing investments under that point of view?
It's a side activity, but it's not so so big in my life. It's just I have some money, because my company is doing well. I have some network because I'm in the entrepreneur ecosystem, and I can bring some value to some founders also that are looking for someone B2B go to market. I mean, we've been doing this at Fleet quite successfully. So yeah, when I see good opportunity, great founders or topics that I really like, I'm very happy to invest. So I do, I think, three kind of investment.
Hmm.
I do seed investment very early, directly in companies, like the one in 4 months, for example. When I see good topic, or I mean, I most of the time I bet on founders more than on topic,
Mm,
founders and a little bit markets, but more founders, And so 4 months, for example, is also great, exceptional founders. I really love the
yeah.
the, the CEO. The girl is amazing, and Sibyl. And also the topic is like payment for complex platform, marketplace,
Mm,
payment management is something that, also we've been talking about this, with
yeah.
cash on delivery. So I think it's appealing to me. So I do direct seed investment, but it is really opportunistic. And then I try to invest in early stage funds from people that I see also, like investment managers that I found outliers, like Anthony, Rerail. I'm investing in another one, UK one also, a guy that is really, I think, an outlier. And I really like those guys because they manage small funds. They are very, very into to the companies they invest. They analyze very well. It's like a really tailor-made investment, and they invest very early, which is very interesting because when you invest very early, you have more chance, to do good
Yeah.
multiples, but also to have some exit at Series B, or thing like that. So I really like
Mm,
those kind of funds. So I try to stick to those guys, those funds. And then I do a third type of investment, which is, I would say, a pre-IPO investment. So like you know,
secondaries mostly, I would say.
yeah, secondary. So I did OpenAI, Anthropic, SpaceX, Anduril in the defense industry. So this, I think, is a great asset, a great investment, because those companies I mean, they are close to IPO, so you have liquidity soon. It's better than a classic private equity where you need to stay for 10 years in the fund. when you invest in space, I did SpaceX 6 months ago, and SpaceX will IPO this year, So
Yeah,
I will get my return after 1 year and a half. It will be maybe 4x, for five, because I invested at 300 billion valuation, and now it's 1.2 trillion, so it's crazy. So I think it's good investment. So usually those investments come from, so it's difficult to access, but it's like employees that get stock options, that want to sell their stock options. Usually that they sell their stock option on the secondary market with a discount. So it's more interesting than the current value of the company, and you get liquidity, when it's IPO. So all those investments are quite risky, of course, because it's
yeah,
not
of
liquid.
course.
But I think it makes sense, and also it's aligned with the ecosystem. Which is tech. Yeah, great
Yeah,
side activity, but it's like 5% of my activity. The rest is
of
being
course.
CEO of my company.
No, no, I totally agree. I also did receive the same 2 or 3 deals, I think, last year. SpaceX, OpenAI, Anthropic, and I think 1 year and a half ago. Secondaries recently are, spiking up a lot. Mostly because you have a lot of people, with those shares and with those options that they want to, cash in a little bit before. And it's very common. But I do like the profile on seed investing and the focus on payments, because I think it's a very interesting market, mostly today. We were talking about cash in hands before, but right now I think that greatest part of those transactions are moving away from cash and are trying to find new, opportunities, a new way to move cross borders. And there is one, let's say, clear winner under that point of view, that is stablecoins recently. There is a lot of kind of movement right now that can be done using stables instead of using cash. And for example, the entire MENA region is pushing a lot under that point of view. So I've recently seen many different kind of early stage startup, mostly pre-seed seed, going in that direction. Very interesting rounds. I don't know what's your take on those kind of payments, and if you have like a preferred payment method that you think that is reshaping the industry.
To be honest, I'm not very expert, on those kind of topics. So I don't want to take any position where, I'm not sure of my thesis or whatever. I would prefer not to say anything stupid on this topic.
Fair
But yeah,
enough.
of course, on the general idea, I totally agree with you. I think it's moving fast. Overall, I think not only payment but fintech in general, no, is moving very fast, and I think it's a great industry now to invest in. I think also the fund where I am, Rewail, is really into fintech.
Yeah.
More general. Not only payment but everything that touch around the finance ecosystem. So not only payment but investment. I think the investment industry, I think, will be disrupted a lot. Also, it's a very
Yeah.
old school industry. Investment manager, investment, and I think there is a lot to do to disrupt, to make it more transparent, more digitalized, less costly, for people. So yeah, overall, I think, yeah, finance, investment, payment are really, really. I mean, there's been disrupt in the last 10 years, but I think it's a long trend, a lot of upside to gain. And you are seeing it with Revolut also, that is working
Yeah.
crazy now. Revolut, I think, is the best startup
Yeah.
scale up in Europe now, the best Europe champion, I think. So yeah. So I think it's a great industry to be in.
Yeah. But let's talk a little bit about Fleet now. So first of all, how did you actually get the idea in the first place?
Yeah, so it came from our own experience as
Mhm.
I would say managing director from startup in France, and back in the day also in Africa with my co-founder Alex. We were looking for. I mean, we had the idea of launching a business together. It was in end of 2018. We were more into B2B than B2C. It was more our skill and the way the industry we wanted to be in, B2B. And back in the days, especially in France, because it started in France, we are French guys. We were seeing big B2B industry that was disrupted. So we are seeing the payroll industry disrupted with a company called Payfit, the banking, B2B bank industry disrupted with a company called Conto, insurance also, B2B insurance disrupted. So all those companies were becoming unicorn. So we were like, okay, there is really something to do in the B2B sector. Is there a big market that is still old school and that we could disrupt? And we thought of IT. and especially computer management, because yeah, we were still buying computer directly from Apple, Amazon, with no service included. It was quite complicated. So buying, it's a lot of cash, it costs a lot of money, I think, for companies, especially in the early days, to buy computers for their employees. Then if you have any issue with the computer, if you don't have an IT guy internally, you don't really know what to do. So usually we were seeing companies that was just changing the computer because, yeah, my computer has an issue, I don't know what to do, I buy another one. Also, when you have to renew the computer, so you renew the computer with a new one because the old one is old, and you don't know what to do with the old computer, so you leave it in a closet or whatever. And so we were seeing like cemetery of old computers in the office. So we were like, okay, there is something to do, in IT lifecycle management overall. It's expensive. There is no real good service, and company behave like a C when it comes to IT management. So it's a mess, and they just buy computer directly on the Apple Store. So we came with this idea of streamlining the entire IT life cycle, procurement, management, and renewal with a subscription-based model. So instead of buying a computer 2,000 euro to 2,000 euro, you will like rent it for 50 euro per month with guarantee, maintenance, support included during the whole rent. And at the end of the rent, after 3 years, you can renew it very easily, and we take care of everything. We erase the data, we get back the computer, we refurbish it, we give it a second life in the market, and we give you a new one. So streamlining the entire IT life cycle was really the idea, and we launched early 2019, and we had day one, we had product market fit. We made a post LinkedIn, and like several founders contacted us on LinkedIn saying, "Yeah, we were waiting for a service like this. We still buy our computer on Amazon. It's a mess." So we got instant product market fit. So it came from our own experience, and it worked because it was a real pain for entrepreneur and for companies.
Oh, that's very interesting. I'm mostly interested about like the life, let's say the end of life cycle, because I've been in multiple companies where you arrive at the end of the hardware life, and they just don't know what to do with them because they stockpile them in a closet most of the time. From time to time they try to sell them because it's kind of a problem to have them on the balance sheet in the end. So it's kind of a mess under that point of view. So what do you actually do with them? You refurbish
Yeah,
them. You are able to bring them to
exactly.
life.
Yeah, so no matter where your employee is, because we've been also like pushed by like big trends like remote COVID, remote
Yeah.
employees that are distributed all over the world. So it's even more painful, to manage a IT fleet, the computer of your companies, where your employees are distributed everywhere, working remote in several countries. So no matter where your employee is, all around the world, at the end of the life of the computer, we send someone to bring a new computer to your employee, take the old computer back, and transfer the data from. So we have a whole platform called the cockpit that we develop, and in which you can, in one click, transfer the data, reinitiate erase the data of the old computer, secure the data, and transfer it and initiate the new computer. So no matter where you are in the world, you have everything that is taken care of. And then the old computer, we take it back. I would say 80% of the old computer, we refurbish them, recycle them, and resell them on the market. Like for example on back market or whatever, on the refurbished market. And I would say 20% are given to association, for free. Yeah, that's
Nice.
part of the product. So the idea is also to have a positive impact on the both on the planet, but also on your ecosystem by being sure that the computer that you use in your company will get a second life after the use, and also that some of them will be given to for the good cause. So we've been sending computer to Ukraine, for example, Ukrainian school. So yeah, many things like this. So yeah, our clients love also this part of the service.
Yeah, I can imagine. I mean, it's a very nice thing to do, to be honest, and really really nice. And apart from that, so how do you actually scale it up? Because scaling it up is going to be like very interesting. You know, you need to deal a lot with a lot of hardwares, a lot of services in different countries. Also, with the kind of service that you do, scaling up is kind of being tricky under that point of view because you're not talking just about the software. You're talking also about all the management of the hardware side. That is not easy.
Yeah, totally. Maybe you already know, but the specificity of Fleet, which is quite unique in the market, I think. I mean, one of the rare companies in Europe is that we've been bootstrapped since day one. No, so we managed to reach like we just did brought our first investor, which is a
Yeah,
private equity investor. So it's not cash in; it's just cash out because the company is profitable. After 6 years, that values the company 100 million. And we've been bootstrapped since day one. No, so we in 6 years we brought the company. We invested, me and my co-founder, two and a half thousand euro at the beginning, and it transformed into a 100 million euro valuation after 6 years without any external funding, any debt, nothing. So we've been able to scale this business by staying profitable with no debt, nothing. And I think it's linked to a very, very strong discipline on some principles, some business model and financial principle that we've been very, very disciplined on about. The first one is that we don't manage the hardware ourselves. Okay, we are asset
okay.
light. We work with a worldwide array of suppliers everywhere in the world, including of course, the computer brand Apple, Lenovo, Dell, etc., but also some distributors all around the world uh, to be able to serve our client. But we don't do warehousing. We don't buy the computer, stock them, and then resell them. When a client order a computer with us and sign a renting contract with us, we order directly to the supplier, and the supplier deliver directly to the customer. So the first thing is that we've been, I would say, like asset light, no warehousing, no risk of stock or whatever. That allow us to scale. So at the beginning, it's more difficult because you have to build this supplier network. So you have to serve your clients. Sometimes they want fast delivery. So you have to build this network of supplier. But once it's built, it's much, much stronger than if you have to deal yourself with the computer. So the first thing. And the second thing is we've been refinancing our contract with banks, meaning that we know it's a renting. So you rent a computer for 50 euro per month over, I don't know, 3 years, but it means that you get your margin at the end of 3 years. So
Yeah,
imagine you want to rent just 1,000 computer, you have to invest 2 million euro just to buy the computer, rent them, and get your money at the end of the rent. Crazy. No, it's not scalable. So we've been refinancing the contracts with bank to get more of the revenue upfront. So Fleet has been since day one, and even when we were at some lows, in 2023 after the crisis of startup, etc. Since day one, we've been two things: first, profitable, but second, also cash flow positive, meaning that we don't really need working capital to keep growing. And I think it's one thing important because a lot of entrepreneurs look at profitability, EBITDA, am I
yeah.
profitable on my balance sheet? But I think even more important than being profitable, you need to be cash flow, the cash management,
Cash flow
the cash
positive.
flow.
Yeah,
Yeah, exactly, exactly. For example, Amazon has been for 15 years, they've been losing money on paper, but they were paying our supplier after getting money from our client. So they were cash flow positive, working capital negative, and it allowed them to grow, by
yeah,
being not profitable. And on the contrary, you have, I don't know, some industrial company that requires a lot of capex, a lot of investment upfront that are EBITDA positive on paper because,
yeah.
but they need a lot of
Because
cash
of
to
the
grow.
assets and everything, but they are burning a lot of cash in the end.
Exactly, exactly. So this is something important is that allow us to scale quite fast and by with our own money since day one.
It's very, very interesting to be honest, because you basically shaped or transform a computer business in what is in the end a financial services, because you're basically renting and you're working on the kind of margin that is between, what you're paying for the hardware and what you're getting from the customers. And it's very interesting. So it's basically managing the financial risk in the end.
Yeah, exactly. We don't take the risk also. Yeah, exactly.
Of course.
If a company goes bankrupt, since we resold the contract to a bank, it's the bank that takes the risk. So
Yeah.
yeah, a lot of positive thing on the business model. And one thing I would also advise, I don't know if you have some. I mean, you probably have a lot of entrepreneur in your audience, but one thing is that it's quite important. I think is along the way when you're entrepreneur, you have a lot of things that happen that was not anticipated, of course, and so you have to stay very flexible in the way to get to your objective, of course, and you have to be very pragmatic on a daily basis. And sometimes you need to change your mind, and that's fine. But I think maybe if you manage to stay quite disciplined and strong on some big principle, two or three big principle around your company values or principle on your business model, I think it's a real asset because, for example, so our principle at Fleet was to be asset light forever, to have this business model. We've been tempting a lot to do some exception to it. For example, in 2021 after COVID, there was some computer shortage, so it was very difficult to find to supply in computer. At some moments, we were like, maybe we should buy a little stock of computer, stock it in a warehouse so we can serve our client better. And if you start doing this, you change your business model, you change your principle, and hopefully we didn't do it. Hopefully, and I think those kind of things, big principle, you have to be quite disciplined on it and trying to find a way to respect them along the way.
Yeah, I think that if you find like a good value, you should stick to it. If you find something that is working most of the time,
Yeah.
you should stick to it, even in hard time.
Mm.
Let me take back you to what you were saying about the investor. So you said you bootstrapped for 6 years, if I remember correctly, 7 years.
Yeah.
But then you went for private equity investors and not a VC. Why? It's linked to the financial, part of the business. So you wanted someone that could bring value under that perspective, or is there any other, reason why?
Yeah, totally. That's a good question. So we went for it's a private equity deal structure, but the
Mm,
fund that invests, the company called Isai, is as a VC DNA. They started with a VC
okay.
fund. They invested in quite big French companies, BlaBlaCar, Malt, those companies. And then they decided to open a second fund, which is called Isai Expansion, which is for tech companies that are profitable. So
Mm,
ourselves. And so when it's a profitable company, the structure of the deal is different. You don't really need cash in, and you can also take some debt from the banks, to leverage your EBITDA. So I think it's much more interesting for entrepreneurs and for dilution and for everything than a classic VC deal. But of course, it's for companies that are in a later stage and that are profitable. So since we've been profitable, we do not have any interest to raise from VCs. We don't really need cash in. VCs, they expect crazy returns. They want to change the trajectory of the company, the culture. They would tell us like, okay, now you need to be not profitable and just invest heavily. And this is not the culture we've been building. So
mhm.
yeah, it's just a matter of like, the stage of the company plus the structure, the
Yeah,
financial structure of the company. But it's not the classic private equity deal where, it can appear like, milking the cow. You're like,
yeah,
it
and
can
you get
sometimes,
restructuring, you cut
yeah,
costs, all of
exactly.
those kind of things. It's kind of a
No,
different deal. I wouldn't call him, let's say, a standard private equity investor.
not at all. I think it's I would say a gross equity or gross private equity deal, like it's
Yeah.
the clear target is to bring the company to 500 million valuation, to bring the company to 100 million revenue. Today we do 30 million revenue. So it's to multiply by plus three the revenue in the next 4 years. And so the plan is to invest money, to keep growing and to be very ambitious, not just to, restructure the company or whatever.
But that's very interesting. So because recently we saw in the startup ecosystem overall, crazy trajectory of growth, like doing 100 million ARR in 12 months or something like that. And I don't think that that should be the standard. There are certain kind of companies that are actually able to do that, but it's not. First of all, it's not the standard. It's not that easy, but it's also not for every business, and also not for every single product or service that is out there. And you said 30 million in revenue. It was at the time of the deal, or is it right now?
At the time of the deal, but the deal has just been closed. It's
So it's
2025
yeah, okay.
numbers. Yeah,
Okay,
yeah.
perfect. So it's kind of a good trajectory. I mean, like doing a 3x of that amount in 4 years is kind of something that is achievable. It's not like aiming for the moon, it's being ambitious, obviously, because it's not easy overall, but it's not like aiming for the moon and hoping for the best. So you're actually building something that is very realistic and achievable under that point of view. Something that private equity investors would like.
Yeah, totally. It has always been our mantra, I would say, is like being very ambitious, but very pragmatic also. And it's also the nature of our business. We are not this new AI business that can shoot to the moon. No, it's a IT sector, computer management. It's brick and mortar, not brick and mortar, but classic business. But
Yeah,
we can, but it's a huge market. So we are taking market share like one step after another. One good thing with this deal also, and I want to mention it because I think it's quite important also, is that our employees that was here with us in the first cycle, in the first 6 years, and some also left 3 years ago, but whatever, they've been able to cash out 100% of their shares,
nice.
which is so it's several million euro for them.
Wow.
And no, I mean, it's important because uh, the stock option, I don't know in your market, but the stock option image has been a little bit,
I totally
affected.
agree with this one, to be honest. Yeah, because we've saw recently a lot of, deals where, founders and maybe the executive side, they were trying to speed up the cash in, but, all the other employees didn't finish the vesting, of course. So they've been left out. And having, companies that are trying to include employees in those kind of conversation, in my opinion, it's a very good thing to do. Also you're going because it testifies basically for you to care about them, but also to be right about the kind of work that they did for you because they were there while you were building the company. So it makes sense for them, in my opinion, to cash in, and it's a very nice thing to do.
Yeah, yeah, and it's no, I think it's well deserved for the employees, of course, and also it's a good. So since we've been bootstrapped, we didn't make the headlines. We didn't raise money, so like we were a little bit under the radar in France and Europe, and we had to tell our own story, to hunt people out in outbound to convince them to come and join us. Talent attraction was more complex for
Yeah,
us than for a VC-backed company.
of course.
So yeah, the fact that we allow many employees to get a lot of money. Some of them are very young, and it's a big amount of money. It's a good story, for the next cycle also, like to tell to people, okay,
Yeah.
the stock option plan we have at Fleet, it's a real one. It's not something that is you know uh, just on paper. Of course, it's
You've been mentioning hiring, how do you hire when you do those kind of things? You didn't actually raise a huge round in the beginning, you're working in an industry that is pretty, I wouldn't call it traditional, but it's very hardware based, let's say. So hiring the right talent, it must have been pretty tricky, mostly in France in the last couple of years where everyone was actually jumping in the AI trend. So it must have been very hard for you to hire the right people.
yeah. I mean, we've been doing hiring internally since the beginning, so we never used any hiring agency. So we developed, I think, good hiring expertise internally. So we do a lot of just outbound. We usually the best people are, you need to hunt them. They don't come inbound proactively and candidate to your company. So yeah, we've been developed, I think, a good hiring expertise, and we've been able to hire great talent across markets, not only in France,
Mm,
but in Spain, Italy, Germany, UK, great
nice.
talents. I think, yeah, maybe at the beginning, I mean, I think the level of the of talent density in the company increased over time. At the
Mm,
beginning, it was more difficult. Now that we are more established and we have also developed this hiring expertise, we really attract
the
very,
right
very good
talent,
people.
I would say.
Yeah.
No, it's a good point. You were mentioning, hiring across markets, and we have been saying since the beginning that this is a business that is very based on volumes. How do you plan to, expand in extra-European markets? If you do, of course, because having the right, you were mentioning the partner that you work with. You need to find people that you trust. You need to handle things in place and everything else. So, how do you plan to do it in markets that are maybe very, very far away from you?
Yeah, so Europe, we already operate in a lot of European markets. So we opened an offices in Barcelona, Berlin, and London. And then when we grew in every of those markets, we realized that we didn't have to be really physically present. So we brought back everyone to Barcelona and we built a big Barcelona sales hub, including the French team, actually, including the French salespeople. They went to Barcelona. And so we operate everything from Barcelona, but we are doing revenue in, I think, more than 10 European countries. The biggest, of course, Italy, Netherlands, UK, Germany, Spain, Portugal. And we have some revenue in the US now also. We have a US team in Barcelona working in shift hours. And that is doing, I mean, we are doing, I think, 6 million annualized revenue in the US
Wow,
after 12 months only. So it's really good numbers. So yeah, we found, I mean, the partner we work with, the banks, the supplier, usually they have presence in many markets. So when it works well in France, with one partner, and we open Italy, for example, we reach out to the Italian team of this partner, and they already trust us. So we work
hmm,
with them. So it's not very difficult for us to open a country since we don't have local operations. We don't have to
yeah.
build teams really over there. So it's just sales and support. And the rest is just our platform and the partner we work with.
That's very interesting. So you basically found a couple of good global partners that are able to sustain operation basically over or all over the place, and you just
Yeah.
handle the bureaucracy part. No, that's very nice, very interesting. Maybe another question from my side: what is the target next? So you have been saying about revenue and your target in terms of revenue. You have been just raising the round and everything, but what is the final target? Where do you see Fleet 5 years from now, for example?
Yeah, I think. Well, I mean, of course, it's a lot about numbers and success. Revenue for I told you, 100 million revenue. I think we need to grow heavily in the US. I think heavily in America. So I see Fleet becoming much bigger in America with probably a sales hub based in I don't know, like Texas or Mexico or whatever. Let's see. But I want Fleet to become more and more international. We're already very international, but I want Fleet to become more and more international. We'll be looking also at companies to buy, to do some build up, to
Nice,
reinforce our footprint. In terms of product, I see Fleet as a really like, so today we handle very well the hardware part, procurement, management, renewal. And we start handling quite well also the cyber security part, how you secure your IT fleet, how you pre-configure your device, how you erase the data, how you push updates on the computer of your employees. But I want to make it even more automatized, especially onboarding, offboarding of employees. It should be very automatized. They get their computer, they open, all the app are installing automatically, all the access, all the license. You don't have to manage all those things, everything from our cockpit, from our platform. So yeah, I mean, we want to develop this more and to be more like not only a great procurement service for companies that have procurement issues, that are distributed, remote, international, or whatever, and I want to procure easily and, not pay upfront, but, just pay months on months. So we don't want to be only this. We want to be, I would say, like the IT partner, of companies. So more managed service provider that will help you on all your IT related topics. We want to, not replace, but help the IT teams to be more productive and replace the IT team for companies that are under 100 people. You don't hire IT
Of
manager when you
course.
are 50
Yeah.
people. And then when you need to hire an IT manager, it's later on with Fleet. And when you really need to do it, you do it, but the IT manager is not overwhelmed with
Mm.
requests and is not in burnout, because he has Fleet to help.
You're trying to make their life easier under that point of view.
Exactly.
And do you see an IPO in Fleet's future or not?
Yeah, I would love to. I mean, the IPO market in Europe is
Yeah,
especially in France. I don't know for you in Italy or even
same.
in
Probably even worse.
yeah, it's not good, huh? It's really not good.
Yeah.
And the few companies, a French company, especially in tech, that try to IPO like OVH Cloud or something like
Mm.
the performance of the stock is not good. So I mean, first off, I think we need to a huge work from the European authority to make it more attractive.
Yeah, I
The
agree.
stock exchange, the IPO, the legal environment. I think we need to catch up now. It's we are
Totally
so
agree.
far behind. It's crazy, no? And then yeah, I would love to IPO in good condition. Yeah,
No, it makes a lot of sense. I mean, the current condition are kind of not the best at the moment. In my opinion, we miss kind of a unified market under that point of view. If you would put together all the countries in Europe, that would be very interesting. But as of right now, we have internal competition that makes absolutely no sense. But yeah, it's a good point. Maybe last question from my side before we say goodbye. Given the fact that you have a wonderful experience in this field, in the startup ecosystem overall, across different market, different stages, as an investor, as a founder, what would be the, let's say, the advice to a founder out there that is starting right now, someone that is launching his own startup for the first time? What would you advise them?
yeah. I mean, yeah. I think there are some big choice that you need to make at the beginning. I
Mm.
would say, not before launching, but I would say in the first 6 months, or I think it's first those principle I was talking about. You need to find the right business model, culture you want to build inside your company, and some principles that you need to be a little bit someone that stand out as a founder. No, so stand out is not being average or not taking position on anything. You need to take position. You need to have principle, and you need to find your own principle and be quite aligned with them. This is the first thing. And second thing is you need to think well the kind of journey you want to have. Do you want to have this a big VC backed journey? You want to go big and fast and take risk? And do you want to have a more like bootstrapped or just a little bit VC backed, but just at the beginning journey? But you want to tell your own story. You want to be more like in control. So those kind of which kind of co-founder do you want to have the journey with? I think you need to choose wisely your co-founder. I think more on like on values, that more on values than on skills. I think best co-founder are people that are aligned with you more than people that have complementary things with you. So yeah, a couple of things that you need to yeah, and it
Think about, I
requires
would say.
yeah, think about, and it requires, I think, good self awareness. I think
Mm.
what kind of person you are, what kind of
Yeah,
journey you want to have, and with who. So this is the most structuring decision.
yeah,
And then everything, the idea, the business idea or whatever, you can change, you can pivot, or but
yeah.
those things you cannot really change them. So be really wise in making the right choice.
Also because it's not a journey for everyone, I would say. So you need to be very, very true to yourself if you want to start it in the end.
Yeah, exactly.
Sevan, it was a pleasure speaking with you. Very, very interesting conversation. Thank you very much for being with me today. And again, good luck for everything that you're doing with Fleet right now.
Thanks a lot for the invitation. It was a pleasure to discuss.
Thank you. Thank you. Goodbye. Bye bye.
Bye.